Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
All right, welcome to another episode of Tax Bites, and today is going to be a rather long episode compared to most because it's going to address some of the coronavirus stimulus efforts and opportunities available to people out there, business owners and so forth, and some clarification of things. And so it's going to be filmed in segments because it's large and I want to kind of make it a little bit more easier to digest. At the same time, please be patient with my editing. I'm not the best at this, so I'll do the best I can. This first segment here, section of this episode, is going to address a lot of caveats, a lot of watch-outs in general. And for the first thing is I want you to understand that how legislation, in a nutshell, tends to work is there's a lot of horse trading in Congress that goes on. Uh, that's between houses of Congress, inside houses of Congress, political parties, the president, the executive branch in Congress. All that negotiating has wording things that mean something to them, but mean vastly different things when the law gets implemented. Because you take that law once it's passed and signed by the president, and it's handed over to the relative agencies, the Health and Human Services, Department of Labor, Treasury/IRS, whoever else, and they take their interpretation and they run with it accordingly. And just as an example, I have seen things where words are used for, instead of dependent, it's son and daughter or daughter. Son and daughter implies blood relative for the most part, a blood dependent child. Dependent can mean a variety of different things. Aging parent, someone who's not even a relative of yours that lives in your house for a certain period of time, a vastly broader definition than son or daughter. And when the Congress says son or daughter in the law, it means different than dependent, and that has implementation, impacts when the law is implemented. So that's just an example of where Congress doesn't always understand what they're writing and when they write it, or maybe they do. It just depends on who's doing the horse trading. So the agency interprets that, and the interpretation process, at least in tax law, can generally be, let's say, a year or more. And that process means that sometimes we are operating on a tax code at a little bit of limbo for a year or so while the IRS kind of digests it, builds their interpretation, and then comes back with enforcement procedures after we've gone through a period of interpretation. And what that means here is that we're taking that squeeze of interpretation down to literally days, if not hours. The law was passed on Friday today, a week ago today, and we're already in a week's worth of implementation and follow through and so forth. And most agencies are not capable of interpreting that quickly. And that's what a lot of this misinformation, confusion, multiple different sources is creating. You also get the implementation. This is the kind of the second or third caveat as you're getting into this implementation of law and programs is going not across agencies, but it's even within agencies it's difficult. I'll give an example. There's going to be expectations that certain forms get filed and have to get mailed in, but a lot of IRS functions are shut down right now. I had to fax something into a department for a client, and that particular phone number was busy, constantly busy. Tells me it's probably turned off for now. So you're having departments that are not even operating, yet higher ups in these agencies, at least with the IRS definitely, but I'm sure others are having the same issue, are not functioning. They are critical to some of these things moving forward. We're going to see payroll things and other things that have to be processed probably through a mailed-in form, and that's not going to get processed very quickly to get those funds maybe. So there's a lot of what I would call ivory tower thinking, and at the ground level implementation is going to be very disconnected, and that's very common in government supported programs. So that's kind of what we're going to deal with here is reality versus theory kind of concepts. You also have it going across industries where the implementation is going to banks and so forth to implement loans, where the government says this program's open, and the bank says, wait a minute, we haven't read your interpretation yet to do our scrutiny of it, so we don't get ourselves in trouble. And that's fair. A bank should have a right to do that. So what may be open was supposed to be open today may not be open until Monday. And those delays can cause or things. Forms are changing literally from one day to the next and rejecting information that was previously submitted. So that's kind of a watch out there, that this cross intra-agency, cross financial services from government to private, all that stuff is creating its confusion, and it's going to be watch outs and gotchas in my opinion. Also, we are implementing a lot of these programs through what I would call an agency that is not used to giving money away, the IRS. It's really designed to assess and collect money. It is not designed to give it out. So when it implements a process to give it out, that creates its own disconnect. It doesn't have a concept that here's a check. It tends to say, oh, just submit this form and we'll get it to you. We'll get it to you timely. And timely to them might be 3 weeks when your business needed it last week. It can't wait another 3 weeks. So the IRS isn't designed for that. And I don't like programs that go through the IRS because of that. I agree the IRS is meant to collect money. That's its role. When you start doing programs like this, you go against the grain. And by going against the grain, you create more problems. So that's its own other caveat, I would say. Um, so then you also have the process of payroll is a large portion of this. And what is not understood is that payroll is a very complicated accounting process. Obviously, within your own business records, it is. But in the IRS, I've had issues where I've chased, an overpayment of funds on one payroll quarter carried to another payroll quarter, becomes this spiraling chasing of a refund check that has to be returned, only to be resent back to the client, only be returned back to the IRS, only be recredited, and you get this weird aspect that IRS payroll struggles with its own visibility of its own payroll. I've had issues where clients had payroll problems, I'm fixing it, and the revenue officer on the other side of the phone can't see what I can see. I've got to print it, fax it to her, and write up a letter to support what I'm seeing, and she can't see it on her systems, or she has to admit, oh, let me log into another system to see it this way. That's the reality of it. And so we're going to be pushing things through a system the IRS is not comfortable or set up to really see credits and so forth. Also, what it looks like is we're going to see where credits in the first quarter are going to be applied for in the second quarter, which creates the very problem I'm concerned with, cross-quarter issues. So these are all gotchas, real gotchas to be concerned about. And the last one, obviously, is scams. This all opens up the opportunity for other, unscrupulous people to create scams. And that's a big watch out in its own right. So this is the big overview gotcha. With the biggest thing is whatever I tell you today, you're going to need to take this and go, or take your needs and go to a tax advisor, tax professional, your bank lender, whatever your lender at your bank, and address it more specifically. This is just kind of, help you be informed. So don't take this as actual, guidance or advice for you to follow. That being said, we'll kind of close this segment out and move on to the next one.